content is king. I don't believe that you can produce too much content because there's all these filters and things like that. And if you put enough out there, more people will see it. Welcome to the Matt Laricy Project. This show about all things real estate, business, marketing, and entrepreneurship. Each show consists of myself, Matt Laricy, and a guest. This is Season 3, Episode 3, Chicago's luxury market with the biggest and best luxury real estate agent in Chicago, Mr. Ryan Preuett. Ryan, how are we doing today?
I'm good. How are you?
Good. And Ryan, you're with Jameson Sotheby's. You've been a luxury broker downtown Chicago for how long now?
7 years.
7 years. What were you doing before this? Anything real estate related?
Not at all. I worked for Gibson's Restaurant Group and was the marketing director. So,
What made you want to pivot to get in the real estate market?
Sean Conlon was someone that came in often.
Shawnee Conlon, yeah.
He, we just got to talking one day, and he kind of convinced me I had the hardest part of the business was having the network and the clients, and we kind of went from there. Nice.
And when you got into the business, were you like, I'm going to be a luxury real estate agent. I'm not going to sell $125,000 studios.
No, we kind of backed into it. I mean, to me, it was a realization that the same steps happen, whether the house is $4 million or $400,000. So, I mean, to me, it was if I can make 10 times as much doing the same thing for this guy, why would I do it with that guy? Right.
So you want to try to target the whales, as we call them, rather than the
it wasn't like to me it's just a highest and best use in running out of time. For me, 50 transactions a year is a good year. So if they're twice as much as they were the year before, I'm gonna grow.
And so when you got into the luxury market, you said you've been doing this for about 7 years now, right?
Yep.
So the market was pretty good. So we were just kind of coming out. That would have been 2013-ish.
Yeah.
So for the listeners out there, pretty much 9 to end of 11, beginning of 12, the market was awful. 12, the markets started coming back, and 13 is when it started kind of doing a hockey stick growth. So you kind of got to ride the wave of a better real estate market.
Correct. And I think that everyone's always like, how's the market? I think that's it's
the most vague question you get asked constantly.
Yeah, but I'm like, well, what are we trying to do? Are you trying to sell something you bought in 2008? It's probably not great. Are you looking to trade up and buy something? You're probably going to do pretty well. So it's all relative.
So, just out of curiosity, everybody has a different understanding. And what would you consider like luxury price point in Chicago? Because I think our luxury doesn't look luxury in like Miami or, LA or New York or something. Like what's a price
I'm
point?
in a couple luxury? Broker groups where it's, they kind of joke I have some of the best looking listings, but then they see the price points and almost act like I'm doing volunteer work when they see, for instance, one of my colleagues just sold a $58 million house in Vail.
Yeah, that would have been the highest priced in Chicago pretty much ever, next to Griffin's.
Yeah,
which was right there.
Yep. So I don't know that there's a number. I would consider luxury something where you're not looking for the cheapest option of the category. For instance, if you're looking for a 2-bed in one of the nicest buildings, like if you're looking for a 2-bed at One Bennett Park, I would consider that luxury. So to me, that's over $1 million, but there might be someone that wants a huge house for $2 million in a different neighborhood, which they literally just want the cheapest option for that category. So I think it's.
So you're saying it's more product related than price related?
I think it's someone that goes to the Mercedes dealership and is okay paying $70,000 more for an AMG engine, and they see the value in it. So
that they want they don't want the cheapest option. They want at least the middle of the road. I mean, because
if you go to someone that say in the West Loop, someone wants a $1 million 2-bed, there's options that you can do that for $300,000 and all the way in between. So it's, to me, what are you really after? And usually it's a service, an experience. It might be a 2,000 square foot 2-bed where people could have a 3-bed at the same size.
So, and kind of talking about that, like, they want the service and stuff like that. Do you feel that your luxury clients expect a certain level of service compared to, let's say, just a client that's looking more at your low end or middle of the road type of product?
I come from a hospitality background, and Gibson's kind of mindset is, whether you're drinking a $2,000 bottle of wine or a Diet Coke,
like
you're not gonna. It's not like you don't give that guy any attention.
Right.
I think it's natural to kind of.
Maybe he's a billionaire that was an alcoholic, right?
So, yeah, no, for sure. But I think it's. I wouldn't look at it as like, oh, this guy's got a big budget, we're going to treat him better. I think it's, and
I don't think I mean more or less like treat him better. I'm just saying, does the client itself, the luxury client, feel like they expect to be treated a certain way?
I think some do, but it's but they're also, keep in mind, that person has probably done 5 real estate transactions, so they have something to compare it to. Where
they're
a first-time buyer,
sometimes
is happy someone like called them back.
Yeah. To me personally, my experience is, unless the people came from like serious wealth and they're wealthy, not rich, wealthy, which is different. Most people are my higher end clients are usually much more easygoing than my first time buyers.
I personally find they're more sophisticated and a little bit easier to, there's no walking them through the steps or explaining here's how we price something, or I just think sometimes it's a little easier, usually because it's not their first transaction.
Right. And they kind of understand it. And I feel, for everybody out there, I feel like the millennials sometimes are the rudest customers out there. And I'm a millennial, so I could say it.
Yeah.
But sometimes they're
I think it's
tricky.
I think people have very high expectations sometimes, and it's really understanding like what are you trying to accomplish, and is that a reasonable goal? And I think that's falls on us a little bit to uncover. And the earlier you do that, the better. I mean,
sometimes people are difficult too. It is what it is. It doesn't matter what type of price.
I think you go to list a property. I think the process is a little skewed in the sense you interview 5 people. Like I always try and put myself in their shoes. Like if someone tells me I can get a certain price point, of course they want to listen to it. That doesn't mean you're actually going to get it. I mean, how many times do you lose a listing because someone just tells them what they want to hear and tries to retrade it later?
I would say that 50% of the time when I don't get a listing, it has to do with price, because I refuse to just give any price that they want to hear.
But I think that's experience and realizing not every listing's a good listing. And
sometimes you want to be the second. To me, a lot of times with the luxury market, I want to be the second in. There's always that high expectation.
I was the 6th in recently, and it worked out all right.
Right. So, like, what about that? You're talking about pricing and stuff like that. Do you find that you do a lot of luxury listings where you get them? Do you feel that sometimes people just want too much? Do you find yourself wanting to walk away, or will you still take it on?
Again, it's like people get very attached to it. A lot of the inventory I deal with is, I wouldn't say it's over improved, but it's trending in that direction.
Yeah.
And they love it for whatever reason they loved it. And sometimes it's putting data in front of them from other people and saying, here's 5 brokers that are active in this building. Here's where they value your unit. Right. And then it's not me saying, you can't get this price. I'm just saying, can we push it? Maybe, but like we got to get an appraiser on board. We got a buyer on board. We got a buyer's broker on board.
So you don't tell them that they're effing crazy or anything like that?
Yeah. I mean, it depends on if they are.
That's my bad approach. Sometimes I say that.
No, but I think I appreciate it because it's. I just lost a listing in Lincoln Park recently that was basically ready to go, and someone came in out of left field and promised, 25% higher. And we had a pretty candid conversation. Right. I don't see how this is feasible under any circumstance.
Well, that may win out for you, because in the long run you'll be right. And
well, 2 weeks later, they had a
substantial price drop.
Roughly the same amount of price drop, and but it's.
It is what it is. You can't win them all, right? That's what they say. So what about with the luxury market? The luxury market has been changing. That's a big thing I wanted to talk about today, is that, about 2 years ago was the best luxury market of all time. Obviously, we're barely past halfway through the year. I personally feel that when the stats are shaken out, that this will go down as one of the worst luxury markets in recent history for sales. What are you experiencing? Are you seeing a lot of luxury listings sit?
I think people buying them realize they have a little more leverage than they had.
Yep.
And I think they, today, I just had a 4 showing. It's like, I get you want to keep looking at the house, but it's like it hasn't changed from the first 3 times you saw it.
But if this was 2 years ago, it might have been 2 showings, and they would have bought it.
Yeah, I think that people, they're just, it's like, you can just see it. Like, it's their property, but they're like hesitant for whatever reason. And I empathize with them. You got an election coming. You got all this coming. I think to me, luxury also starts becoming a little bit more about what are you buying and is it the right thing for you, more so than like price. Like I don't
Right.
think you're buying a multi-million-dollar property, $100,000 one way or the other really matters at the end of the day. Like,
Well, I mean,
of
they
course
got
you
the
want a
money.
good deal, but it's, is this what is going to like get you excited, and is this what keeps you up at night if you don't have it? To me,
Right.
that's where deals start happening right now. Is people see something they can't live without.
To me, what I've been seeing in the market is that, and I always tell people that, in uncertain markets, the rich hold, right? And that's how you get richer, is that you kind of wait and see and strike when you feel like there's more blood in the water. And with all the uncertainty given COVID, the election, the recent civil unrest in the city, a lot of buyers that, like you said, they don't need this property. They want it, but like, do they
Yeah.
want it right now? So they're a little bit more uncertain.
Well, I think
right?
so the bigger it gets, the more especially if it gets towards like a trophy asset. Like
Right.
someone's not buying it in May and wanting to make sure they're like above water in November. It's
Right.
They're probably going to hold it for a really long time. I think as you get even higher on the spectrum, these are generational assets. Like they're not.
Right. It's like a notch in their belt almost.
Yeah,
something else they
they're
wanna
not
have.
that concerned about it, but you start seeing, people in different markets, and I think also that's why I don't put a dollar amount on it, because I've had clients and they've got a $3 or $4 or $5 million house here.
Mm-hmm.
Well, their second homes might be 10, 20, 30 million in other markets, just because
Right.
it requires them to spend that to get in the areas they want to be in.
So, are you seeing more price drops on listings in the luxury market this year than you would say like at last year?
Yeah, I think because I think that, again, a seller wants to hear they're going to get a big number. So the listing agent that rolls in and agrees with them and, tells them, no problem, we'll get this.
Yeah, they're reaching.
3 weeks later, no showings, or, because that, to me, if you've got a property that's great, and, I think our job's to, walk in and say, okay, here's what people they're not going to like this master closet, they're not going
Right.
to like this. You adjust for it, but at some point, why doesn't this sell?
Right.
And I think that, right now, all the uncertainty, I had a couple good deals under contract that kind of stalled out because of the last round of looting,
Right.
which I get.
Yeah, totally. I mean, there's a lot of, like we're saying, there's a lot of uncertainty not only in the country, but in our city in particular. Big cities, us, New York, a couple other cities are experiencing, different civil unrest that we haven't seen in a long time, and it's making some buyers who aren't from here maybe second guess their decision.
There's also, I see people that are, trading up, they're
Yeah.
ready to make that big purchase. I get asked a lot, is this the right time? Well, I mean, I can't answer that, but every situation's a little different, but we can go through the stats and kind of show it there.
I mean, to me, the best time to buy is in times like now in the high-end market, because more people are nervous. And when people are nervous, to me, that's when you strike. You don't want to strike when everybody else says it's the greatest time ever, because at that time you may have missed out on a better deal.
Yeah, I agree with that. I mean, I think I think it really comes down to, we'll worry about the numbers later, but is this a property that you have to have? And if it is, let's figure out how to get you the best deal.
What about like what you're seeing, because there's a lot of this talk about this mass exodus out of Chicago, and people are moving to more like, the suburbs for more space and stuff like that. Are you experiencing a lot of like your luxury sales of let's say your sellers moving to either the burbs or to, a different city or something like that?
I would say my biggest challenge there is on the highest end, you got people moving to tax-friendly states. You're going to Florida, Texas, Wyoming.
People don't like our taxes?
They do not.
They're tough.
But I think this new progressive income tax, which probably is going to happen here,
Yeah.
that's a big deal. If you start, we'll call it roughly 10%. It costs more to live here than Florida.
Yeah.
And then now you've got COVID, and you taught people basically how to work remotely and manage things remotely they weren't used to. It's probably not that big of a deal to sell someone on a Florida winter,
So, you might be seeing a lot of people, and we are seeing this too, and I think that's having an effect on why I personally think, again, it's too early to tell, but when things shake out, I think this will go down as one of the worst luxury sales years, is that, the tax situation and the new changes that are coming along are pushing people out, and it's not helping the market. Not saying it's a bad thing. Things, you can't always have the best year ever.
Well,
year.
But I think you've got, our property taxes keep going up, and we've got, schools aren't great in certain certain areas.
CPS,
and now, on top of it, there's a lot of people that don't feel safe.
Right.
So it's like, what am I paying for?
Right. Yeah.
And why am I here? And then I think that evolves into, is this asset I have in jeopardy of, could I lose a ton of money on it?
Yeah, could it go down? And it's funny because there's and I'm sure you probably read the Real Deal,
Yep.
and every week they publish the top 5 priciest sales. So shout out to Real Deal for doing it. But it's like lately they've been struggling for number 5 to even break $1 million.
Yeah.
And it's like last year everything was like $3 million.
I
plus
think
by
I actually like that piece because I think it's good, but it can go way up or down depending on the week with one sale. And I think it's not like I feel like they make it a little more binary than maybe it should be.
My point is that the bottom 2, the 4th and 5th, which is in Chicago land, has really been struggling to get above $1 million.
Yeah.
And it's at the same time last year I went back and looked the number 5 was 2+, every week. So whether or not
I feel like it's usually around 14 or 15, and lately, to your point, it's if it breaks 10, it's like, well,
yeah, you're like, wow, that was a good week in Chicago. And if you look at and I pulled some of these stats for some of my clients who have a prop in the near north side, which is Gold Coast, River North, Cedarville, and Old Town. In the last 60 days, only 15 condos have sold above or went under contract above $1.25 million.
Yeah.
And that's like a day in a normal market like last year. So we're seeing things kind of change, and again, you can't always have a high. At some point, things got to kind of mellow out. Maybe that's just we're going through, and this kind of happened, and that might bring me to a point of there's a lot of things that people think can help sell a luxury listing, and in different markets, different things can work better. Do you feel like these off-market pocket listings are a good idea to try to sell these high-end places?
I like them personally, because I think there's people that I think excuse me, I think anyone's a seller at the right price.
Yeah.
People are like, oh, I'd never sell that. Well,
yeah.
You can play this game and you could probably get them to sell for a certain number. So I think it backs into, sometimes it lets people test things out.
Mm-hmm.
I get the argument for everyone should have access to all the information,
Sure.
but I think where it makes sense is someone that would sell at kind of an opportunistic price, and depending on what they have, a lot of times people are just not interested. But if you have something unique,
so you're talking about maybe if they want to reach maybe on price that you may not think could get it, but there could be somebody out there where it just checks all their boxes and maybe really good.
I met with a couple this week that has a 3,000 square foot terrace, perfectly manicured and landscaped.
Yeah.
I don't know where to price it, candidly.
Right.
And it's like we're bringing some more people in to get some more insight in how people look at it. I have a pretty good handle on what I think the unit's worth.
Right.
But what is this terrace worth? And then what is this terrace worth in a post-COVID environment, which to me could be a lot to someone. Yeah.
I mean, I talk about that all the time. And I'm at least I think I'm kind of known for a raw, brutally honest type of guy. But there's sometimes I walk in a place and in Chicago, we don't do price per square foot because there's no realistic way that everybody just fucking makes up square footage, so it drives me crazy.
100%.
So sometimes I'll look at a price per square foot approach if it's really odd, and then you look at the comp approach and there's still no comp. So you're kind of it's like an educated guess. That's what I tell people. I'm the realistic thing is there's no 3,000 square foot terrace that's traded.
My personal opinion, you look at closed data. Everyone's going to look at that.
Right.
Here's how we could argue this. And then let's look at what are your current options? What is this buyer also looking at, and why are they going to want this?
Right.
Okay, this terrace, for my last example, is an X factor. What is this realistically worth?
Is it $5? Is it $500,000? Right.
You know what I mean? Is it half the price per square foot of the interior? You can come up with different things. Or sometimes I'm just I think someone would pay $1 million to have this on top of the unit.
Right.
And then that is, but then we need someone that cares about this.
Right. So sometimes maybe in that example, or you pocket list it, or it's like the exclusivity, right? You got a celebrities place that might come on the market, and they may not want to have everybody walking through the house.
There's a big, there's definitely people that don't want their name in the paper, and then it just becomes a whole thing. You're selling, they want information out there, but it's the second. I've listed units that celebrities or Cubs players or something, say, had had 3 owners ago, and it still gets
Right.
picked up in the paper. It's like,
Yeah.
well, how is this a thing? I sold a unit that Vince Vaughn owned
Right.
10 years ago. Like,
Right.
who cares?
Yeah,
You know?
it was 10 years ago. But yeah, I mean, you know what?
And people are
though?
like, I didn't know he lived there. I'm like, he doesn't. He hasn't in a long time.
Right. I mean, it's a sexy factor, though, and some people want to be able to say, like, maybe somebody who's got that money could say, like, hey, Vince Vaughn used to own this place.
I get why
you
the
know?
owner would. I don't understand why
The
the
buyer would.
Chicago Tribune
Oh,
does.
yeah, the Tribune. Yeah, that makes sense. I mean, but they got to sell papers, too, and sometimes
Yeah.
it sells, That's why I like $1 Million Listing and, selling Sunset and this stuff. They
Yeah.
always name dropping people because,
course.
we're just naturally attracted to other success. What about, with this whole COVID situation, have you found more or less browsing luxury buyers? Because one thing I always see, and we're pretty good at weeding it out, and I'm obviously I'm sure you are as a very successful person, is that you do get some people who just want to look at something expensive, and it's like, how do you qualify them? But you don't want to lose them. Have you
Yeah.
been seeing more or less?
I've had a couple, I call them just fake buyers, where
Yeah.
you can kind of, at a certain point in luxury, I don't think it's out of line to start asking for proof of funds.
Right.
Or just, and I don't necessarily, even before that, I'm like, can you just give me a little background on
Right.
your client so I can share it with mine?
Yeah.
It's, some of these properties take a bit of work to get them ready to show.
Yeah.
But we have certainly seen people, sometimes it's very obvious, sometimes it's not. I don't necessarily judge a book by its cover, but at certain points, I had a guy the other day that, told me he wasn't able to charter a plane that came in, and then bought a coach seat. Like, they sent me his plane ticket, and I couldn't help but look, but it just didn't make any sense to me.
Right. But he's got a $25 million budget. Yeah. So.
And he had, $43 million in a proof of funds. It looked a little suspicious. It just didn't make any sense.
Well, one thing I've been seeing at least, and what we've really appreciated is that before it was sometimes, especially with your wealthier clients, if you haven't met them yet and everybody's got that first meeting, you talk to them, blah, blah, blah. And, if you kind of ask for proof of funds or pre-approval, sometimes you get some people who are very upset about it. The upside is like...
I've found that people that have it typically...
Don't care.
Don't care. To me, it's as simple as...
Here's a screenshot.
Or how about I just need a letter from your accountant or wealth manager that says you're able to do this, and that'll probably suffice.
Right.
I don't need to see your exact balance.
But the best part, at least what we've seen, and I agree with you, I think...
And how many times do you see it where it's, we'll get it to you tomorrow, and then it goes on for a week. It's like...
It takes 2 seconds.
If you want to get this, you could have it done. And I've seen a lot of people where it's, hey, a simple Google search will show you on the C-level
or LinkedIn
of
or
this,
something like
of
that.
this company.
Yeah.
You can. It's not that hard to figure out.
Yeah. What we've seen that we liked a lot, though, is that most high-end listings now require you to send an approval or proof of funds to get in to schedule the appointment.
Yeah, I don't think it's, to me, that if you want to buy a house, annoyed or not, you're going to go through that step.
And I found that most people are, like you said, very cool with it. But what I've personally appreciated is that we've eliminated a lot of people that you kind of have that argument with. Like you said, like this isn't a difficult task. It's a
I think it's easier. If you're repping a buyer, I think it's much easier to just say, listen, this is just
standard protocol.
This is the process they've elected to go through.
Yeah, I feel like
if you want to see the house, we got to furnish proof of funds, and that doesn't have to be your full tax return. That's as simple as you have funds in excess of the purchase price, liquid to make a transaction.
Right, and like you said, it takes 2 seconds.
Or a mortgage approval, which candidly I think everyone should have before you do anything.
Yeah, I mean,
how many times you take someone out and, oh great, you love the property, you've spent, been here a couple times, and we're just missing the money.
So, minus the luxury market, what we have to end these things is what we call the Fast Five. Okay,
Yep.
This is where we ask you 5 quick questions, and the first one's, what is the best piece of advice that you've ever received?
I think the best piece of advice I've ever received is from my father, who basically essentially said, if you figure out how people make their money and help them do that, they become, extremely loyal to you. For instance, you probably know the person that sends you the most business pretty well, and probably want to take care of that person. So to me, it's, you start understanding, because I think a lot of people do what we do, and I would say most of my clients probably have good relationships with 2 to 5 real estate agents.
Right.
So what am I going to do to stand out, and how am I going to win there? So I think
Yeah.
if I can help them in other aspects of their life, that'll probably help me get some deals.
Nice. My personal favorite question: do you love to win or hate to lose?
Love to win. I look at our business as, like I said, for me, 50 transactions a year is a big, is a good year. Everyone we meet is a potential client, so
Right.
I got to win once a week, and
Yeah.
I'm happy. So I don't.
Nice.
I try not to get caught up in losing one.
I hate to lose, by the way.
Yeah.
It's
I mean,
just
I
my
don't love it either, but
my biggest thing. Winning's great, but losing, I can't.
Yeah.
Sometimes I can't
I'd rather
sleep at
win
night.
than
So, what about who's your biggest hero?
biggest hero. I've always looked up to my mother in the sense that she treats everyone the same, and it's
Right.
like, and I think in a business like ours, it's very easy to like differentiate and put people on the top of the stack.
Right.
I think it's she just, it doesn't matter why or how, everyone's, she just treats everyone with respect. So to me, that's it's admirable, because most people, I think,
It's the golden rule, man.
Yeah.
You treat everybody the way you want to be treated yourself. If you had one superpower, what would it be?
I would love to know the first thing out of someone's mouth when I hang up the phone with them or walk out of the room with them.
Okay.
Because I feel like that will be the moment of honesty where it's, you'll know exactly where you stand.
Nice. And what makes you Chicago?
I think I grew up in a small town in Michigan, so to me it's, it's the biggest city in the Midwest, but it's a very different vibe here than it is like in New York, or I feel like you get on the coastal markets, it's very cutthroat, and I just
Right.
As well as we do, we try and stay humble, stay grounded, and just treat people the way they should be.
Yeah, I feel like as messed up as it is, and even like as competitive as business like we're in, I feel like people in Chicago are pretty cool with each other. You know what I mean?
Yeah.
I think that's pretty much to be said. And everybody, there's kind of that small town feel in a big city,
Yeah,
and it's kind of
100%.
like, you run into people that you don't think you run into, and people are like, well, it's a small world. It's like, yeah, it is, but Chicago's not as big as you think, so it's kind of crazy.
Especially in the world we work in. I mean,
Yeah. So where can people find you, and what would you want to plug?
I would say the most active I'm on is probably Instagram,
Okay.
Ryan Preuett.
Okay. We'll put your handle up there, and make sure to tune into our next episode and subscribe to our podcast. Thanks for listening to the Matt Laricy Project. Make sure to subscribe to our podcast, follow us on Instagram, and like us on Facebook.